I try to explain to people their great advantages, their edges they have, and that they should get involved in stocks.
Right.
In 1960, people had 40% of their financial assets, including their house, in stocks and mutual funds. In 80, that was down to 25%. It's now down to 17%.
And why do you think that is?
Well, I think people, in the decade of the 80s was the best decade this century for stocks. I think people managed to lose money in the 80s doing it themselves because their methods were so flawed. So I really feel as though I wanted people to understand. I don't want anybody to buy a stock. I'm saying if you're going to buy a stock, you should do certain things. Well, I don't think people understand there's 100% correlation with what happens to a company's earnings over several years and what happens to the stock. If the company, McDonald's, has done very well as a company,
right,
the stock has done very well. People worry about too much money supply, what's happened to the price of oil, whether who's the president, who's being nominated for the Supreme Court,
it's all
the
earnings.
ozone layer. It has nothing to do.
This is the way you make money. If you don't understand what the company does, you should not be in it. If you could predict the stock market, you could predict the economy, you could predict interest rates. If you go buy the wrong stocks, you're going to lose half your money anyway.
Let's say what you do for a living is you're involved in the restaurant industry.
Right.
You supply paper products. You supply kitchen equipment. You help build restaurants.
Right.
You saw McDonald's. You saw Chi-Chi's. You saw Chili's. You saw Cracker Barrel. You saw Dunkin' Donuts, Kentucky Fried Chicken, Taco Bell.
These are all success stories.
These were 40-fold. You made 40 or 50 times your money. You don't need to make that kind of money many times in your life, right?
No.
That's all you had to do was follow the restaurant industry. You only need a few stocks a decade. How many good stocks do you need in a lifetime? Instead of people that are in the restaurant industry, they're buying biotechnology stocks. The people in the chemical industry
nothing about biotech.
The people in the chemical industry are buying oil stocks.
Right.
It's absolutely absurd. People don't understand their natural advantages, and they don't use them. If you don't think you're a good ice skater, or if you're convinced you're not a good cellist, you're not going out and try it. But people are buying stocks anyway. They're not discouraged. They just think it's a gamble. So therefore, they go forward and they bet on one stock for a week and a half, and it goes up, and they make $2 on it. Then they sell it and they buy something else. When 3 years is over, all they've done is generate a lot of commissions. They've probably lost money. If you don't understand a company, if you can't explain it to a 10-year-old in 2 minutes or less, don't own it. Because when it goes down, let's say the stock goes down 2 points.
You won't understand what's going on.
What do? Do you buy more? Do you flip a coin?
And chances are your broker doesn't either?
He or she certainly doesn't know about it. I mean, who knows what all these things are with auto-backed planes and megaflops? Who knows what all this is?
So buy what you know.
10 years after Walmart went public, 10 years after
Walmart.
10 years after it went public, it's a 25-year-old company now.
Right.
You could have bought the stock and made 50 times your money on it. 50 times.
If you bought it 10 years after
it was public already. It had already gone up 5-fold. So you could have made 250-fold. But I'm saying, let's say you were in a town, they came into it and they said, boy, these prices are great, they're doing terrific, I like the bargains. You checked it out. You spent a little bit of work on it.
Yeah.
I mean, people are very careful. When they buy a dishwasher, they do some research. They'll put $10,000 in some stock they hear on a bus. So if you did a little bit of research, you say, Walmart's only 10% of the country. They're not even saturated there. Why can't they go to the rest of the country?
So is this is more of the same? Is it what it is?
It's more of the same. Plus, I show examples. It's a touch more detailed. It actually shows me in action. I picked 21 stocks early in 1992. Right. Some work, some don't. I follow those companies. Some of the companies, the fundamentals deteriorate. Some they improve. I watch those companies go through the year. You absolutely have to invest more in education. You have to invest more in companies. You have to invest less in just spending money. I mean, today people are encouraged to spend. You spend money. Let's say you put an addition on your house. You spend money on that. That you can get a tax deduction because the interest on it is tax deductible. If you invest, if you take your money and put it in the bank, you're taxed at a very high rate. They have this incredibly unfair term. It's called unearned income. Every time I do on the income taxes, and I fill out the number for what you made, the money you put in the bank, and it's called unearned income. It's an insulting term. But anyway, if you buy a stock and you make money on it, you pay a 28% tax on it.
Yeah.
Guess what the capital gains rate is in Japan?
Capital gains rate in Japan is 10%.
Zero. The 500 largest companies in the 80s eliminated 3 million jobs. Eliminated 3 million, and we added 18 million. These 2.2 million businesses started. 2.2 million businesses started in the 80s. Now, some of them didn't make it.
Right.
But if on average they have 10 employees today, that's 22 million jobs. The only thing that creates wealth, the only thing that creates taxes to pay for all these wonderful things is jobs. There is something magic about jobs, and jobs come from companies starting.
That's what I was trying to say. Small companies create
Small
jobs, right?
create all the jobs.
Yeah, right.
So that's what I'm talking. This is not voodoo economics. This is the real thing. You have to encourage people to take some risk, to put their money out, and go start a business. IBM had a wonderful business. They used to go to companies like Fidelity, Chase Manhattan. They used to come and explain to these people how to use computers.
Yeah.
They didn't know how to use computers.
Yeah.
They went to companies and went in with very talented, experienced people.
IBM.
And explained to people how to use computers. Today, all these companies, like Johnson & Johnson's, American Home, Bristol Myers, they have people in the company already that know computers backwards and forwards. The same IBM people walk in with these solutions. They don't need all those people.
So all these companies took IBM's business away from them?
No, they do internally. They have experts internally now that are trained in, it's called now management information systems. They have all these fancy acronyms for it. They have skilled people. All they want now is software and a cheap box. They don't need all these. So IBM was dealing in a system that was very effective for 3 or 4 decades. Now the technology has moved to the chip. The technology has moved to the software. It's not the box.